Hi, everyone. Welcome to our February Climate Reality Check call. We're super excited today and with an all-star panel here with us, which is just so exciting, and we're super grateful to them for joining us.
I really want to thank Selexna and Alex. I'm excited for both your presentations. Thanks to Jean and Ted for having me, and thanks to everyone for listening. Basically, I'm going to cover what is the state of play of the oil and gas industry. And I think, basically the state of the oil and gas industry is pretty bad if you're in the oil and gas industry. And I think the most important thing to say about that at the onset, and I think most of us on this call could geek out for like 5 hours showing you charts that display how bad things are for the oil and gas industry, because there's a lot of data to support how bad things are. So I chose not to do that too much, and I just have a few slides. But basically the place to start at is to say things are as bad as they've probably almost ever been, probably since the breakup of Standard Oil 100 years ago for the oil and gas industry. And that is because of forces that preceded the COVID-19 pandemic, which just heightened and made so much worse all of these pre-existing weaknesses that were already present in the industry. And this isn't, as many, I think, analysts portray it, as the result, the hazardous position that the oil and gas industry finds itself in isn't the result of mysterious, ill-defined market forces. It isn't an inevitable result of market forces. It's the result of what are the nuts and bolts that drive market forces. So those are people making decisions individually, collectively, as governments, and institutionally as in the form of policy, as companies, to move away from fossil fuels over, at a minimum, a solid decade, maybe more. Maybe I could trace it back 150 years since the birth of the industry, but really solidly over the last decade. And that is choices that could go either way, right? So I would say the industry is at a precipice right now. Policy decisions, actions by people and groups could basically see us, sort of rapidly come to, if not the end of the fossil fuel era, at least, a very, very, very shrunken piece of the fossil fuel era, where it plays a much smaller role in politics, in economics, in human rights, in consumption, in driving of energy, just a much shrunken version of itself. Or it could go the other way. There's definitely many governments, many institutions that want to see the fossil fuel industry remain the dominant industry in the world, both, again, from a consumption standpoint, from an energy standpoint, but also a political, social, economic standpoint. And though the decisions that we make right now are going to decide which direction we go. And it really is, again, about sort of people and the decisions that they make. So the first thing I'm going to say is a lot of what I'm going to be sharing is from an article that I wrote. It's the cover article of the September-October issue of Sierra magazine, and it's called "The End of Oil." And it's where I lay out a lot of these issues that I'm going to discuss. But again, the sort of place I want to start us at is saying, really this is a discussion that's grounded in people that have essentially pushed policy and pushed decisions that have said to create policies that move away from fossil fuels, that make alternatives more accessible, more affordable, that restricts government actions on where you can produce and when, and that address issues around climate, around environmental justice and equity, that have essentially pushed markets to respond and start moving away from fossil fuels. So where I'll just begin is again to say that what's facing the fossil fuel industry is pre-COVID. So this is the cover of the Wall Street Journal, December 31st, 2019. This is looking at the value of the S&P 500 US stocks. And if you look way down at the bottom, energy stocks, which energy stocks is defined by the S&P 500 or fossil fuels, just fossil fuels. So this is the worst sector in the entire S&P 500 pre-COVID. Okay, so this was a problem that they were already facing. Why were they facing this problem? They're overproducing a product that people want less and less of. That's basically it. They are overproducing something that people want less of. So this is the demand supply imbalance, again, pre-COVID, looking at the fourth quarter of 2019, supply of oil. This is oil, is the green line, demand is the yellow line. They had been overproducing too much of a product already before COVID. So that, that demand line, I want to emphasize this as a global issue. And this is from a slide from March 2020. So this is produced in March 2020, probably using even earlier data than that. And it's looking, it's looking at the growth in demand for oil. And there's a lot of ups and downs. This 2020 is, of course, the crash in demand for oil that happened because of COVID. But what I really want you to see is the trajectory, okay? So starting back in 2011, the growth in demand worldwide for oil is already on this downward trajectory. And even with very, I would say, enthusiastic prediction. So that 2021 demand for oil is a prediction, which was way over enthusiastic. Even with that prediction, the growth in demand is already on this downward trend. And if I could see my notes, which I can't, I would tell you that you really just saw, this is just there's a precipitous decline in the growth of demand worldwide for oil, starting in like between 2015 to 2017. It falls off dramatically, and you would see an even sharper decline. So a decline in the growth. So there's a few places in the world where there is still an increase, but overall, this growth in demand is falling, but production is rising. And then you have this price. So these are the sort of key forces. You've got too much supply, you've got declining demand, and then you've got falling price. So if you look at, you know, the sort of the hallmark of the price of oil is volatility, starting in around 2008. It's super volatile, right? Anyone who, there's a lot of reasons for that, but that volatility is a problem. But again, the trajectory, the trend down, less and less of a return for a product that there's too much of that people want less of. And that gets us to this. Okay, here's some numbers to throw at you, but I just want you to look at the far, I don't know if it's right or left for you, right, 2012, right? This is a recent high point for the profits of the largest oil and gas companies. 45 billion in 2012 for Exxon, 26 billion for Chevron, 11 billion for BP, 12 billion for Shell. This year, they just posted this month their profit. Exxon lost in 2020, $20 billion in a year. Chevron lost 5 billion. BP lost 20 billion. Shell lost 22 billion. And if you look at the trend, again, this has just been like they're falling off, falling off, falling off. They're just making less and less and less money. So this is an industry that is basically at the mercy of public policy right now, and the mercy of actors that have been pushing for some time to move away from the product, and the expectation of investors, of policymakers, of community members, of activists, that the change in policy will be to move away from this product. And that all of those forces combine to make people run away in whatever sort of field they're in from fossil fuels. I'll just say really quickly, because I know I'm at the end of my time. this was a policy that took us in one direction. We're now in an administration that it has made clear that it intends to move in another direction. And this is a quote from Sarah Bloom Raskin, who either is I haven't been following all the day-to-day machinations of the nominations. She's either been nominated to be in the Treasury Department or already is in the Treasury Department. But this is the perspective, I think, even if she's just being talked about to be in the Biden administration, I think this expresses the tenor of the Biden administration. And all of that, sort of weakness combines to where we're at. But again, I just want to make sure I sort of leave this discussion by making sure when we open it up to questions that there are, if you look at Russia, Saudi Arabia, if you look at the governments that the Trump administration partnered with aggressively to try to maintain the preeminence of fossil fuels, those actors haven't gone away. And again, this is this precipice that we're at that is going to be either policy, individual actions, collective actions are going to continue to move away from fossil fuels, or they won't. And we're not in a place where we can sort of play this game any longer, though. So if you look at 150 years of the history of fossil fuels, there's a lot of ups and downs. There's a lot of growth and collapse. This is 2018, the California fires. This is an unadulterated, this is a non-changed photograph. These were the fires in California. And, we don't have time to continue to play with fossil fuels anymore. And I think that that's really what's also gotten us to this point, is that realization among the public and policymakers. So with that, I will stop and look forward to the other presenters and your questions. Thanks a lot.